Hello and welcome to the Cryptocurrency News channel. I want to talk about how Binance makes money, all the ways they make money, and why they will annihilate Coinbase, like destroy them completely in the future. And it's because of the massive competitive advantage that Binance has over Coinbase, partially because Coinbase, based in the United States, has to deal with USA regulations, and most of their business is actually in the United States. Now let's actually look at Binance's how they make money. I think this is missing one thing, and I'll actually include that later. The one thing they're missing here is staking rewards for Binance. So like Binance will take a little bit of staking rewards if you stake with Binance, or they have some kind of special deal. But Binance definitely makes money through staking. So obviously, there's trading fees. Now, Binance's trading fees are much less than Coinbase's trading fees, and that's going to pull more customers towards Binance. So basically, for users who do not use BNB to pay their trading fees, Binance charges a 0.1% spot trading fee. There is also a 0.5% instant buy-sell fee. So the thing is, if you want to instantly buy and sell, it's actually 0.5%, but if you actually set a price where you want to buy or sell, it's 0.1%. I definitely suggest you do the 0.1%. You just set basically a limit buy or something, and it will sell and buy for you, and it's a lot less fees. If you do the instant buy sell thing, it'll be almost the same as Coinbase. The exact fee is calculated by assessing the 30-day trading volume and the average 24-hour BNB holding of the customer concerned. The more BNBs you hold, the less trading fee you have to purchase. That pumps up the price of BNB. And also, the more you trade over 30 days, the less fee you have to pay. Either way, Binance is much less expensive than Coinbase for most people, which will pull more people towards Binance. Binance has a deposit fee if you actually want to deposit via debit card. It's 4.5. Basically, if you transfer via your bank via ACH, it is actually free. So if you want to deposit to Binance, do it via ACH, do it via your bank. Same thing with withdrawal fees. Users are charged to cover the transaction cost of moving cryptocurrency out of their Binance account. Withdrawal fees are determined by the blockchain network and can fluctuate due to factors such as a network congestion. But the thing is, it might be just a little bit of extra because charging withdrawal fees due to the blockchain network, that's not really Binance's earnings. So they don't really make any money off that. Now, the big thing here with Binance is margin borrow interest. I'm not really sure if Coinbase has this, but Binance does it in spades better, even if Coinbase has it. So Binance also charges a margin borrow interest rate based on the VIP level of the customer and the cryptocurrency involved. So obviously, if you want to borrow for margin trading, which I suggest no one do, Binance will get a fee. And also, when they margin call you, basically they make tons and tons of money when they margin call you. I'm not really sure if Coinbase actually does this. The thing is, like, Binance also has way higher leverage than Coinbase, so they can liquidate a lot more people, and they make a ton of money off this. I think this is one of the reasons they were able to waive the trading fees for Bitcoin on their platform, which will attract even more people to their platform. So like their margin borrow interest, and they also do futures trading fees and leverage up to 125x. The higher the X of leverage, the more money Binance makes. And that's because like the higher the leverage, the more chance that you will get wrecked. And when you get wrecked, they margin call you, and they also will just liquidate you for your money. So that's kind of like Binance's structure. They also have cross-collateral interest rates. Binance supports 4 collateral coins: BTC, EUR, ETH, and BUSD. So BTC, Euro, Ethereum, and BUSD. Daily interest rates are based on the coin chosen and the amount borrowed and the customer VIP level. So yes, they have like the cross-collateral interest rates, and you can actually use those borrow those for collateral. Obviously, you can also get destroyed on those as well. So essentially, Binance's trading fees, deposit fees, margin borrow interest, futures trading fees, and cross-collateral rates. And many of those, they can just basically liquidate and pawn you and basically take your money. Obviously, if you're stupid enough to take 125x on a volatile crypto trade, you kind of are doing it to yourself. So I definitely don't suggest you do 125x on some like random shit coin, because it can go either way. And if it moves even 1% the other way, you get liquidated. Unless you are a huge fat cat and you have like tons and tons of collateral to burn through, that is really not something you want to play into. Now, how does Coinbase make money? Basically, like they have the transaction trading fees, and if you look at their fee structure, if you look at the maker and taker fee, it can be up to 0.60%, and that's way higher than Binance. And the thing is, like, most people are going to be less than 50, 100K per month. So essentially, like, most people are going to be the 0.6% or 0.4%, and that's going to draw people away from Coinbase into Binance, especially if you trade like just one or two blocks. That can be a significant amount of money. You basically have to be at $100 million to $300 million essentially each. You have to be like 100 million to 300 million essentially like each month to actually match the taker fee on Binance. So basically, it's essentially the fee structure, the pricing tier, much more friendly towards Binance. And that's the main way that Coinbase actually makes money. Coinbase also has other ways to make money. They also do staking, and they obviously take a share of your staking income. And honestly, they take a much bigger share than Binance. But they have to make up for Binance's other ways to actually make money. Like they don't have 125x. They don't really have They don't have that much cross collateral margin trading. They don't really have like the high interest margin borrowing that Binance does. They're not allowed, and they're not nearly as flexible as Binance is. So while Binance can waive or reduce their fees for trading to attract more people, Coinbase, because they are a public company, they're IPO, they have to listen to the investors and make profits, they're raising their fees and they're implementing more fees. So essentially, they're going to push away most of their customers to exchanges like Binance in the future. So unless Coinbase turns it around, Binance will annihilate them just because they're way more competitive, and customers are more beneficial trading at Binance and Coinbase, and maybe even Binance.us. I do think some people do actually use VPNs to actually in the United States to actually trade at Binance. So I think overall Binance is just a lot more flexible. Binance has more ways to make money, and just from a competitive standpoint, it's going to pwn Coinbase unless Coinbase somehow finds a way to turn it around, or basically convinces the US to change its regulatory stance on cryptocurrencies, because essentially Binance is just going to kick their ass all over the place. So that's an overview of how Binance makes money and why Coinbase doesn't stand a chance. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.